Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zegel. When taking required minimum distributions, there are some important ordering rules to remember if you're also going to be doing charitable contributions or Roth IRA conversions, because you can really mess up the tax benefits of either one of those if you take things out of order. So let's back up first and start to talk about the charitable contributions, because in this instance, what we are talking about are QCDs, qualified charitable distributions, which is money that can come directly from your IRA to a charity, thereby avoiding taxes on that money. We see this quite often where somebody is already donating money to charity, but they've gotten to age 70 and a half, where you are allowed to do these distributions, and they start sending money directly from the IRA to the charity. Therefore, what would have traditionally been taxed as money coming out of the traditional IRA is not taxed at all because it's going directly to the charity as a QCD, qualified charitable distribution. Really important that the money does not come to you. It cannot go from the traditional IRA to you to the charity. That's not how that works. It must go directly from the traditional IRA over to the charity. Therefore, you need to do one of two things. You need to tell the custodian, whoever is holding your investments, to send the money to the charity. Or what we have done that's worked well with our clients is we've actually set up a whole separate traditional IRA. You can have multiple. So in this case, we keep the main IRA, and then we'll set up a second traditional IRA specifically designated for these charitable distributions. And what we'll do with that second IRA is we'll put check writing ability on it. You can actually get a physical checkbook and write checks out of the account. Therefore, if someone says, I want to donate $5,000 to charity from my IRA this year, and their age, 72, for example, they can do that. We can move $5,000 from the main IRA to this second IRA specifically for charity. They'll have a checkbook that they can use, and they can just write a check to the charity, and that way it goes directly from the IRA to the charity. So there's a couple different ways to do that. Like I said, you can tell the custodian where to send the money, give them a letter of instruction. You can go that route. Or if you want to set up a separate IRA to help keep everything more organized, you can have a separate IRA and write checks out of it. And that way you know exactly what charitable distributions you did for that year. So that covers the basics of the qualified charitable distribution and why it can be helpful from a tax planning and tax avoidance perspective to take money out of the traditional IRA and send it off to a charity. Here's where the ordering becomes really important, because that qualified charitable distribution, once you get to the age of having a required minimum distribution, that QCD is there to satisfy the required minimum distribution first. So, for example, let's say you want to do this $5,000 QCD this year, but you don't do it right away. Instead, you're age 75 and you have a $10,000 required distribution from your IRA this year. So you come in January and you say, all right, I'm going to take care of that RMD, that required distribution. I'll do my $10,000 in January. Got it covered. I'm done with that for the year. Requirement is done. Then you come along in February and you say, oh yeah, I was going to do that QCD over to charity. I'll take care of that too. You write a check for $5,000 to a charity and you send that off. That doesn't work. The QCD must come first to fulfill that required distribution if you have a required distribution. So it's just really important to make sure that as we get into any calendar year, we understand what the plan is and what the ordering needs to be if we're going to take advantage of all these things. You have to take care of that QCD with your required distribution if you have one. It's really called the first order. What's the proper term? First dollar out rule. I always forget that phrase, but that's the IRS's thought, is first dollar out rule, where you have to make sure that things are being done in order. So that's the QCD and the required distribution piece. It's just to understand that you can't take the RMD and then later say, hey, I want to do this QCD. That QCD needs to be part of the IRA and make sure that that is fulfilled before we move on to do other things with the IRA for that year. Similarly, switching gears a little bit, let's talk about Roth IRA conversions. Because for Roth IRA conversions, we first have to make sure that the required minimum distribution is done for the year. We cannot do a conversion and then later on say, oh, we need to do the required minimum distribution. That's not the order. Required minimum distribution needs to be done before you do a Roth IRA conversion. I know this is a lot, but it's just important to keep this order in mind when we're doing IRA withdrawals and when you have a required distribution. Make sure you take care of the QCD first, and part of that's going to be the RMD. So just think QCD, RMD, conversion. Has to happen in that order. If you remember nothing else from this, just remember that order. If you're doing conversions, qualified charitable distributions, and have a required minimum distribution, which I know it sounds like a lot, but it's actually very realistic. We have a lot of that with clients that we work with. We're using all these planning tools to help reduce taxes. So remember that order: QCD, RMD, Roth IRA, conversion. Then after that, you can do whatever other withdrawals you see fit. And that's just part of the tax planning perspective and how much you want to be taking out to live on and how much you want to pay taxes on. But that's the order: QCD, RMD, Roth IRA, conversion.